The following is a presentation of TFNN. The Trader's Edge with Steve Rhodes. Call now, toll free at 1-877-927-6648 or internationally at 727-445-1044. The Trader's Edge. Now, Steve Rhodes.
Good afternoon from TFNN. Welcome to the September 20th, terrific Thursday edition of today's Trader's Edge Show. I'm your host, Stevie Perseverance Rhodes, who absolutely knows that each of us should always be pioneers of our future versus prisoners of our past. Hope everyone out there is having a great day. Let's make sure we have an extraordinary one. And, of course, the easiest way to do that is to always remember that life happens for us, not to us. That's right. When you and I make that one little 2x4 shift, it means we can find the gift in every set of circumstance that life is going to toss at us. Today, you and I, we're going to go check out the circumstance of these markets. We'll go figure out what the bulls and the bears, what the buyers and the sellers are communicating to you and I at just past 1 o'clock in the afternoon. I want you to know that I'm absolutely grateful for your presence here, but more importantly, I'm here to serve you. So feel free to pick up that phone. Now is not too soon. 877-927-6648. Of course, internationally, 727-445-1044. Would love to hear from you. So let's go ahead and get this show started on terrific Tuesday. Of course, this is Tiger Financial News Network. I'm Steve Rhodes, and welcome to the show. Right now, we're basically trading just at about where we were yesterday price-wise. We've got the Dow up 22 points. She's traded 18,143. S&P is up 2 points, trading at 2140. NASDAQ Composite up 2.5 points, trading at 5237. Russell 2000 back 3 points at 1229. The DAX closed up 20 points. The FTSE up 17. Gold is flat. Silver's flat. Silver is totally flat, trading at $19.29 out here. Light sweet crude. I was just looking at silver. Hi-ho silver. Yeah, you've got light sweet crude back 23 cents, trading at 43.60 or so. To the upside, dollar-wise, a move of 714%. Must be a buyout. Tobira Therapeutics. We're going to go with buyout on that one. Or they have definitely cured something. I'm going to go with buyout. Intercept Pharmaceuticals up about 7%, nearly $11. DTS is the ticker symbol. DTSI is the ticker symbol. DTS Inc. is the name. That's up 23%. Puma Biotech up about 10% or nearly $6. Sarepta Therapeutics having another nice day. Up another $5 and change. To the downside, HNI Corp. Down 21%. Yeah, that's $11 and change. Equinix off about 3%, down about $10. Allergan off 7. Chipotle down about 7. Acuity Brands down about 7 as well. So what are the markets doing and why? Excellent question. I had some charts ready for you, and then that Skype, just as I was getting ready to sign on, the system went ahead and crashed. I know. Things happened for us, not to us. The for us was, well, so much for that chart. Actually, it was really just the 10-minute chart for the ES Mini. Just showing one of the patterns that you and I take a look at all of the time out here. So I'm going to just go recreate that for us. I'm doing it off screen here. So that's why I'm looking right. You might be thinking that that's just a football play. I look right, but really go left kind of a deal out here. We'll just go with this chart. It's going to have a bunch of other numbers and symbols and things of that sort on there. But nonetheless, we will see that coming from the low yesterday, I believe this was at 130. To the high here earlier in the day, you're going to see one of those beautiful 7 waves out there. Of course, right now you're seeing the lettering format, so you're seeing letter wave G. So as the 10-minute chart for the ES Mini was making its high, was forming that 7th wave, you and I, we always pay attention to those on any time frame. If you're trading a daily chart, just to understand the turns, the weaves, the ins, the outs of the market, you want to just simply understand how these patterns work for all time frames. You go down to a shorter time frame, such as a 10-minute, and you pay attention to those 7th waves. In this case here, and of course, we want to pay attention to Stevie's oscillator unchanged line. That's the red line that you see on my chart out here. Now, if we take a look at wave counts to the downside, I think we're only like three or four to the downside, but let's go actually check it out. Come on, work with me. I got a number of things on the system that are trying. Yeah, we're only in wave 3 to the downside, but really the level to be watching, you've got the ES Mini trade at 2133. I believe it's 2131. Let me give you the exact number. I was wrong. 21.32 1/4. That's support. Very significant support when we take a look at the ES Mini. Again, if we take a look at this chart out here, well, we don't have a choice because that's what's on my screen. We have a choice, but we're going to look at it anyways. So that's the red line going across my screen out there. A hidden level of what we'll call major support out here. We also have support just below it because during that 1 to 1:30 session yesterday, what the ES Mini did was it formed a nice little hammer candle. Hammer candle right around the swing points previously out here from about 10 o'clock to about 2 o'clock in the afternoon back on September the 16th. So if we do see price move below 21.2775, well, one, you've got an A to B equals CD to the downside. It would look like this. I'm going ahead and drawing that in just to give us our price projection, which says it just takes us back down into the swing point level here in that 21.23 area. I would venture to say more likely if we see a close below the hammer candle of 21.27, it's not just 3 points that we'll see as far as a move to the downside. It's more like we'll see 21.19, 21.12 on the radar. But right now, prices just simply move down to a level of support. Is there anything that gives me the reason to believe that everything should crack and head south? No. If I take a look at volumes inside the ES Mini as it was making that move just back to a different 10-minute chart, but one where we can take a look at volume out here, you're not going to see volume accelerating to the downside or anything along those lines. So at this stage of the game, price just simply has come back to a level of support. We'll see if that holds. If it doesn't, we know where price will head to. But at this moment, we should expect that price will, in fact, hold here. In fact, we will probably be at or around this level. I'll go ahead and make that that wacky forecast, may not be so wacky, that we're probably going to be around the same level tomorrow around this time as the market's just kind of feeling out the top side, the downside, the upside, the downside. However it is, we want to go ahead and frame it. Speaking of framing, how do you like those senators out there? Go get a job, you guys. You know what I mean out there. Talk about the way that some people frame things. You got to love it out there. In any event, yeah, and as P says, the Bank of Japan is going to be out with some thoughts tonight on quantitative easing, again, all over the board. Kompai to them for all that they do for you and I. But in any event, the market's probably not going to do a whole heck of a lot out here between today and tomorrow around 2. And then I believe that's then I think around 2:30 there's a Janet Yellen will do a Q&A or what have you. So, by the end of tomorrow's trading session, we'll have a pretty decent idea as to what the market wants to do. Who's in charge of the market? Well, that's pretty clear. It's been that way for a while. Well, it's been that way inside the New York Stock Exchange. And in fact, I've gotten a couple of emails. Of course, you can always reach out to me by email, steve@tfnn.com. Inside the Tiger's Den. I love to get those instant messages, private or otherwise. And, of course, phone calls are the best. 877-927-6648. We get back. Let's go answer those questions. Find the most bullish case for the market. And there was the other question, find the most bearish case for the market. So let's do both when we get back. Hi, I'm Steve Rhodes, host of the Trader's Edge, heard daily at TFNN.com and author of Mastering Probability, a daily investment and trading newsletter service that I send out each morning by 8 a.m. My morning newsletter service covers exactly what the markets have been doing since last night's close, providing you with an edge on your trading day ahead. You get actionable trading ideas, including the exact entry, stop, and profit targets. Plus, I'll teach you the patterns and hidden market correlations that will make you a better trader. As a subscriber, you'll gain access to my 90-minute money management workshop, where I'll teach you the secrets that'll save your assets. The bottom line, I've got your back, including a 30-day money-back guarantee. See for yourself the type of analysis I provide each trading day by signing up for Mastering Probability today. With nothing to lose, this is an offer you should not pass on. Mastering Probability can be found under Trading Newsletters on the front page of TFNN.com.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com. The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN and you'll find the Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now.
Steve takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Welcome back, folks. Dow's up 29 points. S&P is up a couple. NASDAQ is up 4 points. So first, with regard to who's in control of the markets right now, and what we use, one of the tools that we use to identify that, well, certainly we look at that all-important level of support. I gave you that inside the ES Mini. So that was 21.32 and a quarter. Prices above that, buyers are the ones in control of the market. Now, that's going to be different than the communication that's coming to us from the New York Stock Exchange, NASDAQ Composite, and the Dow Jones right now as we take a look at their advanced decline oscillator readings. That is the bottom panel of our chart out here. Only when they get above zero, and they really need to stay above zero for more than a day, and it needs to be more than just slightly above zero. But nonetheless, when they are below zero, the message is very clear. It is sellers that are in control of the market. That includes the NASDAQ Composite, which is has made it all the way back to its September 7th high out there. Now, if we take a look, New York Stock Exchange, by the way, it hasn't broken down, although it is amazing. I'm just trying to get that out of my mouth out here. It is amazing, actually, that we've seen that advanced decline price oscillator stay below zero since July 20. Let me give you the right date here. I don't want to give you the wrong information. July 27th. There was 2 days, maybe it was 3 days. 3 days in early September where that oscillator reading did get above zero, but immediately went back down without chopping around. That message says that it really was the sellers that were always in control. You and I, we can't trade the New York Stock Exchange, and so therefore hogwash to a certain extent out here. But we do see that it's in a rising price channel. So, so the trend inside the New York Stock Exchange is to the upside. But as sellers, that it's just like a football team. These guys are just moving it 10 yards, 10.1 yards at a time, getting first downs out here. If we take a look at the NASDAQ Composite, still above the 2015 high, still above the 2000 high. It's still in breakout mode to move to the upside out here. In the case of the Dow, well, the Dow isn't. Dow's just in a rising price channel. It's below the 2015 high. It's below the high out here that it established back in 2016. And it also is, and this is where you start to get, let's say, the bearish case for the market out here, right? And that is this, as soon as I can find it. Where did it go? Index consolidation right in front of me. If we look at the Dow by the way, if you're watching us on Tiger TV, and I sure hope that you are, because you got HD live stream and you get to see these wonderful charts out here, because really this is all about charting. It's just our ability to read those charts and what they mean. And what you see in 3 of those 4 charts out here are rectangular boxes. Those are consolidations. Now, the beauty of a consolidation pattern is that when you break it to the upside or the downside, you then have what we call a measured move. It's equal to or greater than, yes, can be greater than, that consolidation pattern. Well, inside the Dow, you can see that consolidation pattern has been going on since the 2013 timeframe, so a very long-term consolidation, a nice wide one. When price breaks out of it, which the Dow did with some conviction, by the way, this is a weekly chart that we're looking at back in the July 2016, and then comes back and tests it as it did really back in August of 2016, tests it and rejects it, says you go higher. Higher where to? 2170. 21,170 is the price target move for the Dow if it can get back above the consolidation. Therein lies the problem for the Dow. It's back inside the consolidation. Now, still inside the rising trend line out there, so it's really going to be that trend line. You might say, well, okay, we'll draw that in there for me too. All right, well, since you asked, I will go ahead and do that. You asked kindly too, by the way, and there is a simple trend line. So you can see that until that trend line gets broken, we don't really know if the pullback inside here is real or not. You break back below that, and then the target, just like Ben and I, we talked about targets yesterday with regard to the S&P 500. In this case here on a weekly basis, that becomes June 27th. We just look at that swing point. Could be all the way back down to the bottom of the consolidation as well. But right now, the trend is the friend. It is the most bearish of all of the indices with regard to this consolidating pattern. Why do I say that? Well, the S&P 500, if we go to next, you're going to see its consolidation pattern, right? Not the same length of time because this started back in 2014, early 2014. Price breaks above it, comes back and tests it, does this the week of September 5th. Then last week, it's back above it. This week, we're still above that consolidation. It's got a price move of 24.56 slated, and it is back above the consolidation level. So that is a bullish move. That is not a bearish move by any stretch of anyone's imagination out there. If we take a look at the NDX 100, which has made it all the way back to the 2000 highs out there, I don't think the Qs have. Maybe the Qs have, but the NDX 100 has not. This, too, has been in a consolidation pattern. It's well above that. So the Qs are signaling higher price. How much higher? A lot higher price. Over time, it's a weekly chart. My goodness, it's been consolidating for a couple of years, so this could take some time to play out here. It's not going to happen tomorrow afternoon. Inside the S&P 500, it still is signaling. I'm giving you the bearish case out here. We have the bullish case. Yeah, that's the bearish case. It's going to go to 24.50. How do you like that for the bearish case? What would be the real bullish case? Well, you actually know what I mean. I just meant to say one thing. That was the Michael Jordan move there. Said one thing, was thinking something else. Maybe that was not the. Maybe that I won't say that. But here's what we do know. You got a breakout. It's underway inside the NDX 100. It's confirmed. Consolidation breakout. Still wants to move higher. S&P 500 still in bullish mode out here. The Dow, not so much just yet. That's the longer term, right? We're looking at weekly charts out here. So what else do we know about the market? Good question. Excellent question. Let's put this one up here. We are in what's referred to as the unfavorable seasonal cycle. You might say, well, what the heck is that, Steve? Well, that's the sell in May, which really they meant to say sell in July. They just simply couldn't come up with the proper rhyme. I know others of you out there have. And if you were going to go ahead and do the seasonal patterns, you would say, well, really, it's like sell in July. But it's not a 6-month seasonal pattern because you come back in the end of September, early October timeframe, because therein lies the real pattern for the so-called Santa Claus rally. Do not wait till Thanksgiving, for goodness sakes, for Santa to arrive. He does that in the parade. The miracle on 34th Street out there. But the miracle in the stock chart says 34th Street is like sometime around the end of September into the early October timeframe. So my goodness, let me look at the calendar out here, see where we're actually at, because we're September 20th. And the end of September, that's only, by my count, 8 more trading sessions before we start to get into that time frame. Now, it doesn't have to be 8 because it can go into October, but that would be 8 trading sessions and then maybe another 5, another 8. 16 trading sessions or so before this upper panel chart out here really begins to kick in. Yeah, and this is, by the way, this is the average directional movement for the Dow over the last 84 years out here. So, if I take us to where we're at right now in that pattern, it's right here. You're looking at the upper panel of my chart out here. See how the market kind of moves slightly higher, moves sideways, and really starts to fall off around September 21st. What's tomorrow's date? Son of a gun. Do you think that the average seasonal cycle over the last, I'm just looking at my calendar here again. That's why I'm looking off screen. I got some screens. This guy's screen's coming onto my kazoo. I don't even know what a kazoo. I do know what a kazoo is. You probably even had a kazoo at one point in time. That's probably one of the instruments that I can play is the kazoo. But how is it? You see my cursor out here, right? You can see the very bottom of my cursor. It shows the date September 21st, 2015. It's really September 21st, 2016. I got to kind of move things back and forth in order to give you the proper overview. How does that happen? Look, if the market does move down, it's going to bottom here, end of September, early October. Steve Rhodes with TFNN. We'll be right back.
In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com. Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Technomental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Technomental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Technomental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com. Tiger TV is an exciting way to experience TFNN programming. See high-definition video giving you crystal clear charts, as well as seeing some of the faces of TFNN's highly acclaimed financial experts with crisp, full-fidelity sound. Catch Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, Larry Pesavento, Think or Swim, David White, Andy Hecht, and Daryl Martin in crystal clear, high-definition audio and video. Tiger TV, exclusively at TFNN.com. This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Welcome back, folks. So before we went to that break, we were looking at the annual seasonal pattern. We were also looking at, on that chart was also a second-term president pattern that's out there. Last year of a second-term president. There's also this pattern out here that is the one that is in play as well. We just take a look at cycles out here. And that is the top pattern. which says Democrats retain the office of the presidency. The bottom is that it shifts from a Democratic president to Republican, and helps you to identify. So here is how we extend the dates beyond the end of September and the early part of October. Now, with regard to office changing hands from a Democrat to a Republican, it's different the other way around, and that's not one of the options that we have this time around here. That says that the market bottoms right around October 23rd, not to be exact, but exactly on October 23rd out here. So we'll go ahead, and then you got the nice Santa Claus rally that begins. So we'll go ahead and take a look at that. It also said the market should top around September the 5th. So in that case, if we come back here, we take a look at the Dow. Let me get rid of some of the things that are out here. There's so many lines that, you might just say, well, what the heck are you looking at? Well, that becomes pretty easy. We're going to get rid of that. And what else do we need to get rid of? I don't know if we need to get rid of that trend line out there. But if I look at when the market in the Dow actually topped, it was August 15th. So far was the high. If I take myself to September 5th, it's really kind of right around those highs as well. So that being said, I don't know. Does the market know something? In the case of the other opposite situation, which is where the Democrats would retain the office of the presidency, it says that around September the 5th, to be exact, you should see a low inside of the Dow, and the market moves higher into October 20th. So for those of you that believe that it is that Hillary Clinton is the one that's going to retain office, if the market is going to follow the typical pattern, and then you're bearish the market out here, you're opposing the cycle. And it's a strong cycle that's out there that would say that the market would move higher into October. If you are on the other side of that coin, that says, hey, you think that it is Mr. Trump that's going to go ahead and be the victor out here, then you would anticipate the market's going to move lower into the end of October, right around October the 23rd. So those are the influencing cycles that are out here. Nothing is going to influence you any more, though, than those consolidation patterns. You can say cycles, schmichaels. You say it with me, cycles, schmichaels. We pay attention to cycles out here, but sometimes those detour signs, the road gets fixed and repaired and the market does its own thing. And what we do know is these consolidating patterns, they're a heck of a lot stronger and better, better than the the cyclical, the 4-year, the 8-year type cycle patterns that are out there. Either way, we still pay attention to both, and then we just simply look for clues. So with regard to the most bearish case out here, just in summary, it would have to follow along the path for you out here with regard to cycles that are out there. It would have to follow along the path that it would be Donald Trump that was going to go ahead and get the office of the presidency. That is the cycle associated with the market moving down into October. You'd also have to see the trend lines break inside the Dow, same thing in the S&P 500, and you'd have to really see the NDX 100 get back inside that consolidation, which is down quite a ways, down around 47.17, nearly 100 points south of where we're trading now. Not that it can't be done, but right now there's nothing, and I do say nothing, to indicate that that is really the way that the market is going to play out. Okay, I have a question out here from AG inside the Tiger's Den. AG has asked me to comment on, says, Steve, can you talk about sector rotation if you'll have time and if you are comfortable with that? I'm comfortable talking with anything that I can help provide you with information on. I don't know if I will answer your question exactly the way that you're looking for, or provide you with the information you're looking for. But if not, you need to just post in another question out here. So cycle rotation, with regard to what the market has been doing. If we take a look at, and what that really means, what it means to me is where during this sideways move, right, we've taken a look at the New York Stock Exchange, in essence, since July, you've seen where I say, the charts say, that it is sellers who have been in control, yet the market's kind of really moved sideways, right? Still in an upward trend. So we've seen we've seen individual stocks. We've seen some sectors within some stocks move to the downside. Now, you can get really involved with dive down into all the different sectors inside of the markets. I can do that with this software, with the eSignal software package. I don't do that, but if we take a look at it in general, just break apart the now 10, you count them, 10 sectors within inside the S&P 500. I hope that would work for you, AG. If not, maybe what you would do is give me a couple of those other symbols for some of the other more focused sectors that you're taking a look at. But if I take a look at the S&P 500, and really now it's got to primarily be the 9 sectors out here because the 10th sector, the real estate sector, actually vanished from my screen. No, I see it here on this one screen. But here is what we have seen cycle-wise take place. We've seen utilities take a hit. All right, we've seen utilities take a hit. Now, utilities, this is the utility index within inside the S&P 500. Yes, influenced by interest rates and so forth, but it also moves in the same direction as the Dow. So don't think that this is this has to be a non-direct or a directional type play or inverse directional play out here, because it doesn't. Here's what we know: there was a high that formed back on July the 6th. Since then, what the XLU has done was it went down. I think I covered this with you a while back, several days ago. And if I did, my apology. But we're covering it now. Makes that nice relative strength price divergence pattern. Means it moves lower, does with less relative energy out there. If anything's going to identify a bottom or anything is going to identify a top, it is that pattern. Not present at all tops, by the way. All significant tops, it is, and not present at all bottoms. But we look for that pattern. When that rubber band stretches, and it says that it really shouldn't be stretching like that, that's what we look for. Well, how do we know whether the stretch is accurate, is meaningful? If it's going to be a top or bottom, we look for the cavalry. We look for those bullish and bearish candlestick signals. You got to know how the market communicates to you much better than the way that I speak to you, because it should probably be dropped from my portion of the English language. But really, you need to know. Need would be a better word, wouldn't it? You need to know and understand, and I mean you need to really, really know. This is how the market communicates to you. One primary way, through Japanese candlesticks out here. That's what it does, especially with regard to the patterns that you might trade out there, if you do trade any kind of pattern. And I don't care what it is. I don't care if it's a Bollinger Band. I don't care what kind of band. Rubber band. In this case here, we're looking at the rubber band. Price moving lower, doing less relative energy. Nice little piercing candle shows up. That tells us the cavalry is alive and well. And then we see price actually get back into the trend line. It's above the oscillator and change line. That happens to be the red line. I know there's a bunch of charts or a bunch of lines on my charts out here, but that tells us price oscillator turned up. That's bullish. The utilities have actually gotten bullish here. So there was a sector rotation, AG, out of utilities. You now got a bottoming signal inside of utilities. It is possible that with regard to this sector, it's ready to move to higher prices. You certainly had a nice little bottoming pattern out there, and we certainly did see during that time frame where we saw people moving out of that sector. Now, another sector, I don't like the word sector out there. Another sector that has similar patterns out here. This one complements of your senators and mine. I don't know if my senators were the ones that were just yanking the chains of all the healthcare stocks out there, but it is the healthcare sector, XLV. Just like the utility sector, it made one of those beautiful seventh wave patterns out there. But what it hasn't done just yet is gotten above that oscillator on change line. It's trying. Could this be the little engine that could? Steve Rhodes with TFNN.
Are China A shares hot or not? If you trade China A shares, now may be time to take a closer look. Trade CHAU or CHAD, Directions Daily CSI 300 China A Share Bull and Bear ETFs. China A shares in either direction. Visit directioninvestments.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC. TFNN is excited to offer a brand new piece of market scanning software unlike anything the industry has ever seen. John Logan and his team have spent years developing their market profile tools to finally be able to release the TAS Profile Scanner Plus. And right now you can get a 2-week trial absolutely free just by visiting TFNN.com and providing us your name and email address. The TAS Profile Scanner Plus is the premier market profile based scanner in the industry, powered by the acclaimed TAS proprietary algorithms, this feature-rich scanner is a standalone desktop software that instantly filters over 2,500 global financial markets such as stocks, ETFs, commodity futures, and Forex. Within 3 minutes of signing up, you can have the software downloaded and running on your computer with a complete roadmap of market indicators and inflection points to trade off using the TAS Profile Scanner Plus. Sign up today and try this amazing piece of software by visiting TFNN.com.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
This segment is brought to you by TFNN. Test drive all the newsletters for free at TFNN.com.
Welcome back, folks. Right now, working on a chart here. Had a request that came in just a short time ago asking me if I would go ahead and take a look at the yen. So that's what we're looking at right now is the Japanese yen. And we can see that it's been in a nice little descending price channel. That price channel, in essence, really beginning back on October of 2015. So for one full year, the yen has been moving in a very nice, orderly price channel. Those are the green diagonal lines that are on my stock chart out here. So at this stage, here's the real message that we have inside the Japanese yen. The trend will only change when we see price close above, not test, but close above that descending price channel. Are we there yet? We're not there yet. Could we be there tonight, tomorrow? We absolutely could be there tonight or tomorrow, but we are not there yet. And therefore, the only conclusion that we can draw is that the yen still has a further retracement to go. Now, the $99 question, or the $99 level, 99.99, stays at 99 if we talk about getting smart out here. That is a strong level of support. That is the red horizontal line going across my screen. You break below that, meaning you close below that, then price probably heads down further. Oh, boy, that's a really big how did you reach that conclusion, Steve-O? What I was really meant to say was, don't you like it how I talk to myself out there? I can slap myself silly. What I really meant to say is you break that level of support and price probably goes down to the bottom, the lower side of that descending price channel out there. Now, that is the daily chart. If we take a look at the monthly chart, just to give us some perspective, well, I don't know what kind of perspective that is, but it's going to give us some perspective. We're going to go ahead and get rid of those lines out here. What we're really looking for is the retracement levels, right? Just longer term, hey, where are we on the retracement level side of the market? And that would then say that you're looking at 94.78. 94.78 would be the 0.618 retracement level, oftentimes an area where anything that is trading will find a level of support or resistance. In this case here, it would be support. So until we see the yen break to the upside, break that descending price channel, then we have to assume, it's the only assumption that we can draw here, that price will continue to head lower inside of the Japanese yen. So I hope that helps answer your question, just as I hope that, AG, that I was able to answer your question with regard to the cycles or sector rotation is really what I should say. Can't really give you a good view here of the XLF. I was hoping that what these guys would do, and maybe they have done it, I just haven't seen it, hasn't come through on my charts. I'll go ahead and make a request to eSignal, is to get rid of all the real estate entities that were inside the XLF, those that they've taken out and put in their own sector in their, and price the XLF so you and I could actually use this as a tool to figure out what in the heck that is doing. Those guys at Dow Jones and Spiders, did they not realize they were totally going to screw up my charts? And I believe yours. So I'm going to go ahead and get in touch with the e-signal guys, see if there's some way that, because otherwise, from a technical charting perspective, this is hogwash. And I mean that in the dearest sense out here, that I just really, yes, we can use other banking indices. Absolutely we can. No question about it. But the idea is, hey, we've got all this great data inside the S&P 500 sector, what goes on inside the XLF, and we'd like to just keep it the same way because everybody else has that as well out there. So I can't really, I cannot make heads or tails with regard to look at the XLF. Yeah, can we look at the BKX? Can we take a look at some other banking sectors? Yeah, we most certainly can out here. And anyway, what that means is if you're trading FAS and Fuzz, or what is it, FAS and what's the other one? It should be Fuzz, you would think so, but it's not. What you now really need to do, of course, we suggest that you do this anyways. Go take a look at least of the top 10 holdings, see what those individual stocks are doing, to then go ahead and trade those vehicles out there. Those of you who are relied upon the XLF to give you that information, you can't, not until things get properly priced out here. Hey, I can tell you what's going on inside the real estate sector, XLRE. They got this thing all figured out, sort of, but I can't tell you what is going on inside of the XLF. Question that says, there was another question, bonds. There was another question that came in as well. Ask me what the charts tell us that bonds are doing. And here's what they tell us that bonds are doing. We're going to look at the 30-year Treasury. That's what I'm looking at. And the 30-year Treasury was giving a signal, still is giving somewhat of a signal that it is trying to form a bottom. That's the 30-year December contract that we're looking at. Trying, I say. Hasn't done it. It attempted to do it as it tried to get up to 166.79. That is Stevie's red line. That is the one and only, the famous oscillator unchanged line out here. That says the oscillator is still falling. That says that the bounce or the movement that we saw this morning was nothing more than a test of a level of resistance. So what does that tell us? I don't care if it's trying to form a bottom, which it is. It still wants lower price. It's got to close above there. With that term got. We're going to have to add the got to the Funkin' Wagnalls technical analysis dictionary so that guys like myself, I don't know if any of the other gentlemen here at TFNN use that, but I apparently use it a lot. I don't think I use it other than when I'm on the air, but I'll have to pay attention. Nonetheless, we're going to go ahead and add that to the technical terms of chart communications. And in order for the bonds to get, now this could happen tomorrow. I'm just telling you what the message is as of 1:48 p.m. And that is that these still are bearish. So price can get down, test the June 24th low out there, but the message is short. Short bonds is the message. You get above 166, it's now 80. You're going to see that changes from moment to moment, but it's right in that price range. Then you can switch to a bullish. Then the trend will have changed inside of bonds. I suspect, I hate that suspecting, but I suspect that's what it really wants to do out here. But it has not accomplished that task. So that is what's going on inside of the 30-year Treasury. A question, would I take a look at Intel, INTC? Absolutely, INTC. And I'm glad that, Mitch, I'm glad that you asked about that and brought that up. I'll pull a stump. What was his name, Stump? That's a great question. Now, actually, Mitch, I actually meant it. Whereas I think it was a little bit disingenuous telling each of the senators out there, that's a good question. He didn't exactly say it that way, but in essence, he kind of said it that way. However, what I'm going to say is I'm glad that you brought that up because with regard to the market and its direction, Mitch is actually absolutely right here. We should go take a look at what's going on inside the semiconductor sector. And so if we take a look at it, here's what we know. Let me pull up Intel out here, INTC. We know that it gapped up with some pretty decent volume a few days ago. Am I right or am I right? No, that's what the stock charts say. It has nothing to do with me being right. But we did get a nice gap up with big volume out here. And so, hey, was that a blow off top? No, not yet. You certainly can't call it that. Gapped up with 22 million. No. It wasn't 22. It was 74 million shares out there. So all that it has been doing the last couple of days, just really pulling back into its breakout area. Now, when you have a gap, the breakout area is the top of the gap, which is 36.65. So it may be, Mitch, that is where this is headed to as we speak. That's looking at the daily chart. I'll go ahead and turn on the market profiles. just see what we can see out here. And that shows you're above daily, you're above weekly. You got a brand new profile that formed out here today, as a matter of fact. So 35.56 should be the significant level of support. When we get back to this break, Mitch, how about you and I and everybody else? Let's go take a look at the longer-term charts for Intel, and let's go take a look at the semiconductor index, the SOX, and get a feel for what it's saying. Usually, this gives us an early warning message of a market that wants to move lower. I don't think that's its message.
If you're looking to discover a new financial resource and diversify your financial portfolio, consider the new Market Safe Focused Commodity CD from Everbank. This 5-year U.S. dollar-denominated CD gives you exposure to 6 equally weighted commodities, including gold, silver, copper, nickel, soybeans, and sugar, in one powerful CD. With annual pricing caps of 50% per component, you could earn up to a 50% upside payment at maturity if the commodities increase in value across annual pricing dates. And should the opposite occur, your principal is 100% protected. Keep in mind, returns are based on CD performance. There is no annual percentage yield or periodic rate of interest on this index CD. Don't miss out. Take advantage of this financial resource designed to grow with the times. The October 13th funding deadline will be here before you know it. So hurry over to everbank.com/TFNN for the CD's term sheet and other important product details and disclosures. Once again, that's everbank.com/TFNN. This advertisement is sponsored content. Everbank is a member FDIC.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
It's 2016 and TFNN has a brand new programming lineup to kick things off. Starting January 4th, Swim Lessons by Thinkorswim and TD Ameritrade will be airing 5 days a week at noon Eastern Time. Join hosts Scott Connor, Kevin Hinks, and Cindy Faber as they host their daily options program live at noon 5 days a week with no commercials for the entire hour. Nico DeHaan and Paige Clark will be moving their program, Living a Primal Lifestyle, to twice a week, Tuesdays and Thursdays from 7 a.m. until 8 a.m. Eastern Time. Wake up with Nico and Paige and start your day off right. The Bull Bear Binary Option Hour by Nadex will now be live Mondays and Fridays at 10 a.m. Start and end the week with the 3 hosts, Tom O'Brien, Tommy O'Brien, and Daryl Martin, as they break down the world of trading binary options and spreads. For all the details on the new 2016 programming lineup, visit the front page of TFNN.com. TFNN, educating investors.
Join David White as he keeps you up to date on the latest tech stocks while he uses his Power Law Vector Indicator to identify the best trades. The Power Trading Hour, next on TFNN.
Welcome back. Dow's up 30, S&P's up 3, NASDAQ Composite up 7. Sorry about that little voice change out there. Came back from New York City a little under the weather. I suppose you're supposed to actually sleep in your hotel room in New York City, of course, with bombs going off and those communications on my phone going off. There were 3 of them. It was like first it was telling us, hey, there's a second bomb that we've located. Stay inside your building, wherever you were at. And, what was I going to do? Stay inside the building. Then they send off, and it's amazing the sound they can get out of a little phone out here. It had nothing to do with any, and they control that somehow, because it wasn't a sound I've ever heard. And, of course, we had 2 phones in the room, so both were going off. Just in case you were going to try to sleep through that message, you weren't going to sleep through that message out there. And of course, then they send you the message to let you know, hey, we've removed the bomb, or the second device, right? At that stage, I wish I could go back and actually see those messages, the second device, which, wasn't cooking, wasn't a pressure cooker that was cooking, chicken and dumplings or something out there. So they let you know that they removed that. That comes into I don't know, 3 in the morning or something after the 1 in the morning in any event out here. It was back to this. 'Cause I only have 3 minutes left, and I want to answer Mitch's question. And Mitch specifically said, Steve, how does Intel look for a short soon? So we took a look, and I said, hey, blow off top? No, I don't think so. Moved up with volume, price just pulling back, and light volume into support. I will give you the most bearish case that I can make for you on Intel, and that's this chart right here. As price was moving higher, you're going to see a red number 13 out there, a lucky 13 perhaps if you're looking to short it, and that is referring to a time to mark count. That is the TD combo. And a TD combo with 13 count can identify, right, just like for my cousin Vinny, can identify where a change in trend is going to take place. Now, price was rising, doing less relative energy, no bearish reversal signal yet. What is it that you would look for? Mitch, I would say if you want to short Intel, you want to see price close below Stevie's oscillator unchanged line. That is priced right now at 36.83. Test and reject that area. It does not want to go lower. Get below it, and then it says it wants to go lower. Now, the other problem you have, so that's what I would be looking for. That is the only short signal that I can see inside of Intel. What else has Intel done out here on the weekly chart? It's made a 100% move. Oftentimes, a stock wants to do something else. However, the move of the move in this case here, which takes us back to December in 2014 or 13, depending on how you're going to actually pronounce the year, we can see that it had volume up there of 133 million shares. Last week, as it was testing and rejecting that area, it did it with 159 million shares, pushing higher with volume. Quite frankly, it was taking out the B point of an A to B equals CD from December 28th. We can't really use that volume, can we? It had 49 million shares. We know that volume would be light because of the holidays, but let's face it, it was going to be less than 159 million shares. So you do have an A to B equals CD to the upside on a weekly basis in Intel out here. So I say just be careful because, wait on a daily basis, wait for at least that price oscillator to turn down out there. And then, go ahead, fire away to your heart's content and put your stop above the high from last week or the week before out there. Not the week before, last week. That would be where your stop would be. So that is on Intel. So, folks, stay tuned. I expect we're not going to see a ton of movement inside of these markets. We're going to see a little bit of shopping, right around lunchtime when the computers take over, and everybody goes out to lunch, get some fish and chips. Things of that sort, and maybe just a hoagie. I don't know that I've ever had a hoagie. Maybe I should add that to my list of things that I ought to do once in my life. But stay tuned. Your favorite polar bear and mine, David White, is up next. And then because it's Terrific Tuesday, you got the Tom O'Brien Show from 3 to 5, Andy Heck from 5 to 6. Have a great Tuesday. We'll see you on wonderful, maybe wild Wednesday. Take care, folks.
Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date, active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters.
You're watching Tiger TV.